Good morning. So in today's video, we are going to analyze a property that I received an email from an agent saying that this is an investor opportunity. So we're going to see if this is in fact an investor opportunity. So the first thing that we want to look at is the spreadsheet that we're using over here on the left. If you'd like a copy of this spreadsheet, please reach out to me. Just send me an email or private message me, and I'll send you over a copy of this spreadsheet that I like to use for analysis. Keep in mind that this analysis is for a buy and hold rental property. This is not a flip analysis. I can tell you that this property is not a good flip at this price point because there are comps that are lower than this price. And for a flip, you want to have at least 80% off of the after repair value. And then minus your rehab expenses. Ideally, you want 70%. But so this is not a good flip. So we're checking this for buy and hold. I'm going to use as many as of the free information websites that you can find, so that you can utilize those websites for your own analysis. I am going to show you one flaw when working with Zillow on this, and I'll explain that to you as we go. Okay, so whenever I'm analyzing, I always like to analyze just at the retail price. Okay, so right over here on this spreadsheet, I'm going to put in $215,000. When I do that, it automatically calculates a 20% down payment. It automatically calculates estimated closing costs on the buyer side. Excuse me, and then it gives us total cash invested and how much is financed. Okay. The initial repairs needed. So what I do is I'll go through and I'll look at the pictures, and it looks like it's in decent shape. I mean, this is not decent shape for resale. If we were flipping, I'd redo all the flooring, update the kitchen, so on and so forth. But for a rental, what you can do is you can keep this flooring and basically just repaint the house to make it more of a neutral color. And there might need to be a little bit of work done in the kitchen. So I'm going to say about $5,000 in initial repairs that are needed. So that's going to show us total cash invested on this property is going to be $54,450. This number is important because this spreadsheet is going to calculate our return on investment based on that amount of cash put in. Okay, so that, you'll see how that goes. Okay, so now I'm going to go over here to Zillow, and I'm going to start entering in all these other details. So first thing I'm going to do is go down. If you scroll down Zillow, a couple things that you can see is, number one, you'll have the sale history area here. So this is really good because it shows us what is done in the past, if it's appreciated or depreciated. Now, this property is a co-op. Okay, so we actually have an interesting situation with that because it doesn't appear that it's even reached its 2006 price point yet. It's even lower than that. So that's not uncommon for a co-op because they don't tend to appreciate as quickly because of the different laws or rules that go into a co-op. Okay, so we're going to go down here. There's your tax assessment. So this is what we want to see. We want to see the monthly, it's in this area, it's called estimated monthly cost. So what this does is it gives you a rough estimate of your monthly PI, principal and interest payment. We're not going to look at that because the spreadsheet's actually going to calculate this out for us. Mortgage insurance, you're putting 20% down, you don't have to worry about that. Property taxes, it spreads that out over for you. Home insurance, this is a good number to pull. HOA fees, this is not a good number to pull because Zillow does not always show it. These units and condos will have a condo fee, or they'll have a condo and co-op fee. HOA fees are the only things that tend to show up here. So we get a lot of calls from buyers that are looking at a property and they get really excited until I tell them what their condo fees are, and they're like, I don't want to do that. So what you want to do is I go over to the MLS, and then I can see right here the condo and co-op fee is actually $520.17 a month. Okay, so what I want to do is I want to take that and multiply that out by a year. So 520.17 times 12 equals, go in here, 6242 5.04. Okay. Financing rate, right now, interest rates are really, really low. People are getting 2.3, 2.2%. This is an investment property, so we're going to analyze it as such. If you're somebody who's buying this as a primary residence, these numbers are going to be much different. But I'm going to put it in 3%, and we can probably get lower than that, but I like to be more conservative with the numbers. Okay, total assessed value and land cost assessed value. This is important because the spreadsheet is going to calculate depreciation for us. So you go over to this property is in Alexandria County. So you go over here to the realestate.alexandriava.gov, and you're going to do search by address. And I've already got the property pulled up. So you can see that in 2020, the total value, this is the assessed value, this is not the resale value, the total assessed value is $156,606. So I'm going to put that. Then the land cost value is $63,832. So I'm going to put that right over here, $63,832. And that's going to give me a percentage of the land cost to total value. It gives me that percentage, and we're going to use that for depreciation, which I'll show you in just a few minutes. Real estate taxes. Okay, so you're going to go, and I'm not real familiar with this site. I usually do Fairfax County. So here is our tax assessment, and total taxes for 2020 were $1,808.84. Real estate taxes annual, $1,808.84. Okay. Personal property does not apply. Land improvement cost does not apply. Monthly rent. Okay, here's something that's really beneficial for Zillow. When you go in and you'll see rental value, they'll give you a rent estimate. So that number is not always accurate. Do not finalize your deal based on rent estimate. This is only for quick analysis. So what this does is it allows you to plug the number in, and you can see what is the estimated rent value going to be. And then if the numbers are close to something you're interested in, then you can actually do a CMA and see what the actual rents are that people are getting right now. So $1,750, so that takes your annual rent up to $21,000. Vacancy, typically what we recommend is 10% of your cash flow gets put back into the account and left there for vacancy, to account for vacancy. Also for CapEx savings. That CapEx are capital expenditures. So like if you had to do a furnace or you had to do anything like that. So in this example, I want to show you how the property is going to perform on its own without putting the money away, because you can make those calls yourself. So I'm actually going to put these at 0. Okay. Vacancy, PropX, okay, insurance. So insurance, we get this from Zillow. So we'll see that home insurance is $75 a month. So that comes out to 75 times 12 is $900 a year. Okay. Now we have repairs. So repairs for the year. We use this for if this was, say, year 2 of this investment, we wanted to analyze the property and see what our return is going to be or was for last year, what it actually performed as. We would put the actual number in here. Warranty for the property, utilities, professional services. Okay, so these are all fees that are elsewhere. Let's see, property management. So whenever I'm analyzing a property, I am going to analyze it for passive income. Which means we have property management. So I put in 12% here to calculate that. Some property managers are more, some property managers are less, but that's just, again, I like to be conservative. So to see the actual performance of the unit, we're going to put 0 here, and then you can make the call on whether property management works for you. Okay, so these are our numbers. So now we're going to go over to the worksheet. So you can see purchase cost, cash invested, closing costs. You can see the financing amount, the actual financing percentage rate, and the number of months. So you can change all that if you want to. Over here is an amortization schedule. I don't really look at this very much, but if you ever did want to look at it, you can see that amortization schedule. All right, land cost, this is where depreciation is calculated. So your total depreciation is $4,631.06. So I'll explain depreciation in another video. You can contact your accountant about that as well. All right, so total operating cost for the property. You have real estate taxes are $1,808.84. You have association dues, which are $62.42.04 for the year. And then you have insurance, which is $900. This would also be where we would put management fees or CapEx repairs or total repairs here. Okay, so those would be added in here as well. So your total expenditures are $8950.88. Okay, so that's the total operating expenses for this unit. So now we go into the four benefits. Okay, we have cash flow, we have principal reduction, we have taxes, payments or savings, and we have appreciation. Okay, so if you go into the first one for cash flow, this will calculate out all of your expenses, all of your debt service, everything that's going to come out of pocket out of that $21,000. Oh, wait a minute, I'm sorry, vacancy was still in there, so we can take that off. Okay, so everything that out of that $21,000 that is an operating expense is going to come through here, and so that's going to leave you with a positive annual cash flow of $3,347.21. So that's actually pretty good for this area. It's really hard to cash flow in this area. Next, you have principal reduction, and the reason you want to look at principal reduction is because you see annual debt service. The tenant is paying rent, so when they pay rent, part of that money goes towards your principal, and part of it goes towards your interest. So that's going to leave you with a reduction in principal, so you're actually going to get a gain of equity. And principal reduction on this one is $3591.02. Okay, so this is an actual gain. Next is net operating income minus all of your expenses times whatever your tax bracket is. So I've got 35% here, again, to be conservative. So in this example, for this amount of income, you're actually going to pay $807.51 in taxes. Okay, ideally, well, I can't say ideally, but a lot of times you'll run into a tax savings here that you can actually use against your earned income. You have to check with your accountant on that. Appreciation, I have that in at 2%. We saw on there that this had not appreciated, so we're going to change that to 0. Because when we looked over here, we could see that this was purchased at $245,000, and now it's listed at $215,000, and that's actually high compared to other units, so it's not appreciating at this point. It may end up appreciating, but if it does, that's a gamble part, so you don't want to calculate and depend on appreciation. So those are your four benefits. This is where you turn the profits. Now, this is a rate of return calculator. So basically, the first one is return on investment with appreciation. So if there had been an appreciation gain there, this number would reflect that. So the two with appreciation or without appreciation on this property are going to be the same number. So return on investment for your cash that's invested, which when we scroll up here is your total cash invested is $54,450. Okay, so for that total amount for this year, your return on investment, when you calculate all these factors in, is 10.067%. Cap rate, I'll go into cap rate on another video and explain what that is. That's at 5.6%. For this area, that's pretty good. There are other areas like in Florida where 8, 9, 10% is common, but here in the Northern Virginia area, 5.6% return is pretty good. And then cash on cash, this is your actual return of cash. That's actually this number versus the amount that you invested is 5.496%. So the question becomes, is this a good investment or is it not a good investment? Well, that's why it's important for you to establish your goals, what you need your money to do for you, and then you analyze and you make that judgment for yourself. Everybody's goals are different. If you have any questions about this, or if you'd like me to help you establish your goals or go into more detail, please feel free to reach out to me, and we will see you on the next video.